It's a big week for tech earnings as two of the Mag 7 names, Tesla and Alphabet, are set to report quarterly results. Now, these results come as big tech comes off its worst week since April amid this rotation that we've seen out of large cap names into other underperforming areas of the market. So what should investors expect this earnings season from some of those large cap plays? We want to bring in Mark Mahaney. He is Evercore Managing Director and Head of Internet Research. Mark, it's great to talk to you. So let's start right there. You cover Google, Alphabet, one of the names that's set to report here this week, and really set the stage maybe for some of that momentum that we could see here within those larger cap tech names this earnings season. What are you expecting there? And what do you think that's going to then signal ultimately here for some of the strength that we could see down the line?
Well, from Alphabet, you'll get two particular specific reads. You'll get a read into how online advertising is faring, and that's extremely critical for Meta, a little bit for Amazon, for Snap and Pinterest, names like that. And then you'll get a read into cloud computing demand. So, two of the biggest areas, volume-wise, revenue-wise, in across tech that I look at. But I think across tech. So, and our guess is that you're going to get positive reads from Google. All the channel checks we've done have suggested that digital advertising demand has remained relatively consistent and maybe slightly stronger than it was at the beginning of the year. You also have these major cyclical events with the elections and with the Olympics, and Google should benefit from all that. We want to see whether some of their AI overviews, Gemini search results are kind of giving them an extra boost, maybe in terms of query volume. It probably is too early to see that, but I'd be curious to get some color on that. And then again with cloud, the checks. Last year we had a lot of rationalization, or the word was optimization, in the cloud industry. And I know that Google is much smaller than AWS and Azure from Microsoft, but it still is a bit of a read. And our checks were very positive kind of across the board. We're behind. Optimization is behind us. Demand is back, and Gen AI workloads are starting to power more cloud usage. So my guess is all in, we're going to get a positive read through to the rest of tech from Google's results on Tuesday.
What do you think is going to be the catalyst for Alphabet in terms of the ability to turn its own AI-powered search engine into a revenue driver and moneymaker that advertisers can trust the same way that they've trusted the traditional Alphabet, particularly as ChatGPT's popularity only continues to grow here?
Well, two things. One is on the consumer side, whether the Google search results are perceived to be better, more relevant than they were in the past. And we've done our own survey work on this. Google gave out some data points at Google Marketing Live, but we did our own survey work, and so far we have found that consumers find the results from Gemini and AI overviews to be better than what they had before, and they're responding by doing more searches. It's only one survey, so I want to track it over time. All of us have been experimenting with using Google, and if you probably have noticed an improvement in the results, sometimes you really do get these much better results than you would have had before. You don't get the 10 blue links. You get the Gemini result, which is kind of a full-fledged answer to your query or to your question. So I think the search engine has gotten better, and I think it'll show up in the numbers in the query volume. And then on the advertiser side, which is what you were also asking about, I mean, our checks have kind of indicated that the quality of the leads coming out of Google search has slightly improved. If that's true and if that's sustained, that's what advertisers care about. Are the leads converting better than they did before? Are they more targeted? And already, you had very high levels of return on ad spend or return on investment dollars with Google and search. And so if you can maintain that or even improve that, you've got a chance for kind of a double-barreled boost to Google search revenue, both in terms of query volumes and in terms of improved return on ad spend, for which advertisers will be willing to spend more. So I'm just intrigued by that thesis. It's our thesis. We're looking for a lot of data points to confirm or refute that. I don't think that's in the numbers. I don't think that's in street estimates. I don't think that's in the stock price either. That's one of the reasons why Google's one of our top picks.
So Mark, in addition to Google, so you like Google, it's one of your top picks. Who else then is best positioned right now this earnings cycle?
Well, I also want to step back. We've had a big rally in a lot of these stocks. I refer to 6 stocks as the Super 6. It's Google, Amazon, Meta, Netflix, Spotify, Trade Desk. They're all up 30 to 60% year to date. Having said that, it's hard to materially outperform if you're up that much, year to date, off of reasonable valuations to begin the year, not off of beaten down lows, which was the case last year. I want to be highly selective here. It's just I like Google because I think there's a product cycle, and there's a few other things on the YouTube side. I think there's a product cycle, so I switch. Uber is our number 2 pick, and there I think we just had some dislocation in the stock recently over fears of robo taxis and how that could disrupt ride sharing. I don't think it will. I think robo taxis will be part of the ride sharing solution. I think so the extent that if we're right on that, then actually I think there's a lot of value unlocked to come on Uber. So Uber's our number 2 pick. And then our number 3 pick is Shopify, a recent stock that we upgraded that's had 2 disastrous quarters in a row. And we're hoping that that's the end of it, that the numbers can at least hold now going forwards. And if that's true, then you could have a real recovery trade out of Shopify. And I also think that Shopify is intrinsically a very good asset to begin with. It fell into my DHQ camp, dislocated high quality camp. So those are our top 3 picks: Google, Uber, Shopify.
Can you talk to me about why you took Amazon off your list?
The stocks had a nice rally. It's a little harder to find that. I didn't feel dislocated. I still have it as a buy. Still have it as a $225 price target. I was a little concerned about some of the iffy retail sales data points that we've seen. April and May were weak. However, June came back gangbusters. So there may not be probably isn't a problem with Amazon retail, and so they should fully benefit from the cloud improvement or maybe even inflection that we're seeing across the industry. We'll get a little bit of a tell on that from Google tomorrow. So I continue to like Amazon. It's just I'm looking for slightly better risk reward. And I thought Google with a product cycle, Uber with kind of a false debate, I think, on robo taxis, and Shopify, which is just materially underperformed. And so I thought there was more of a mean reversion, if you will, trade there. So that's why.